Hello everyone, I'm Daniel Culbertson, Senior Economist with the Indeed Hiring Lab, here with the U.S. labor market update, looking back at the first quarter of 2023 with a focus on our business-to-business vertical. Let's start off first, as we often do, looking at the Indeed Job Postings Index, which shows the overall trend for all jobs on the Indeed site. Here we index February 1st, 2020 to equal 100, and you can see how job postings have trended since then. The main takeaway here being that as of April 7th, Indeed job postings are down 15% from the same point 1 year earlier. However, from this chart, we do know that demand for workers remains strong. The Indeed job postings index registered a 133 on April 7th, meaning that demand for workers, as measured by job postings, remains 33% above its pre-pandemic baseline. If we take a look at some of the categories inside the business-to-business vertical, we can see a sharp decline, especially in some corporate-related roles. Software development job postings are down about 55% from the same time last year and have actually just fallen below their pre-pandemic level. Banking and finance job postings are down 41% from the same time last year, while the slowdown in insurance postings has been much less pronounced. Other segments inside of the business-to-business category are holding up a bit better. After sharp declines early in the year, construction and production and manufacturing job postings are down 6% and 18% respectively. However, education and instruction job postings have flatlined about even from the same point this time last year. While some of the business-to-business category is one of the softer spots in our labor market, recent turmoil hasn't been enough to move the needle across the rest of the labor market. This chart shows layoffs and discharges for all types of jobs as measured by the Bureau of Labor Statistics. This trend line is nearly as flat and as low as it's ever been, and still even below its pre-pandemic baseline. So while we've seen plenty of headlines about layoffs in the tech sector, what we've seen so far hasn't been enough to impact the rest of the labor market or show meaningful change in the number of layoffs. Lastly, I wanted to cover what we've seen as far as worker churn inside of the business-to-business category. In good news for many employers in the B2B category, the level of worker churn in professional and business services industry, which includes many corporate roles, has returned to its pre-pandemic level, as we can see from the quits rate measured by the Bureau of Labor Statistics. This is consistent with workers getting a bit more cautious amid layoff announcements and all the economic uncertainty. So wrapping up, the labor market continues to cool off. Indeed, job postings are down 15% from the same time last year. We are seeing a slowdown in some business-to-business categories, especially those related to corporate roles. Layoffs remain low despite all the announcements that we're seeing out of the tech sector, and we are seeing less worker churn, especially inside of that professional and business services industry. That's all for now. Thank you all for your time and attention. Please follow along with our blog at hiringlab.org, and until next time, take care.